Eyeing opportunities overseas, hot spots in the emerging markets. In today's cover story, will consumers score with changes to FICO? Plus, the skies become crowded with startup airlines and investors hoping to inhale profits from a drug stock. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Tuesday, August the 12th. In today's First Look, the stock market rally sticks. Stocks made mild gains on Monday, with gold lightening up $1 and oil up 24 cents. Wall Street appears to be worrying less about conflicts overseas. Well, the table turns on gambling for Caesars Entertainment, at least in Atlantic City. The casino operator reported a wider loss for the second quarter, sending shares tumbling down. And Techmira tacks on more gains. That stock rallied almost 15% Monday as the FDA loosens up on its Ebola treatment that is still in development. Trader Scott Chelledy joins us on this Tuesday morning for a closer check on the market. Good morning to you.
Morning.
So what's going on with small caps? I know a lot of traders have been watching small caps for clues about the large caps. What do you see happening here?
Well, obviously, they've been the trade du jour. I think that there still needs to be some caution taken here. You know, with the Shiller Index coming out about the valuation of stocks being as high as they were in 1929, 2000 to 2007, I think we've got a little bit of a concern in front of us. So don't get too carried away. I'd start to maybe even start to think about taking some of those small caps off before you really want to jump in with both feet.
We have some really critical economic data coming into the market this week, including retail sales. So what's your trading strategy?
Well, retail sales is going to be a big one, and whether or not you believe a 6% turnaround from a minus 2% GDP to a plus 4% GDP is really on the cards, then you're going to be even more keen to see what this number is going to be like. At the end of the day, we need to see 3 or 4 good ones in a row in order to get that hockey stick recovery we're all looking for. I don't think we're going to get the hockey stick recovery, and I don't think we're going to see the retail sales rip their face off. So I think it's going to be tepid, so be careful.
What rotations are you seeing in the market right now? Moves between perhaps bonds and stocks and commodities?
Well, that's a great question. You know, it goes right into what I've been saying. Slowly but surely, we've started to see these valuations get a little bit stretched. Now, if your grandmother died and left you $10 million, I'm not quite sure I'd pile in the stocks with it altogether right now. I want to stay in stocks because I think we'll be up 8 to 10% on the year, but we're seeing rotations out of the stocks as well into bonds, keeping those rates low and that bond market rallying. A perverse year we're going to have this year where both equities and bonds are going to rally.
Thanks for your thoughts today.
All righty.
Chuck Coppola steps in now. Hello, Chuck.
Angie, Wall Street might react today to more headlines coming from the U.S. and overseas. Russia is sending aid to Ukraine despite warnings from the West. Western leaders believe the aid convoy could be a strategic move by Russia to invade Ukraine. Russian restaurants are said to be grappling with sanctions that are stopping meat, fruits, and vegetables from entering the country from the U.S. In Iraq, a new prime minister received praise from President Obama, who's keeping tabs on world events while on vacation.
The United States stands ready to support a government that addresses the needs and grievances of all Iraqi people.
President Obama said he urged Iraqi Prime Minister Haider al-Abadi to form a new parliament immediately. The Associated Press reports that the U.S. is providing weapons to Kurdish forces who are fighting Islamic extremists.
As tensions simmer around the globe, is it a good time to get in or get out of emerging market stocks? Matt Shapiro of MWS Capital checks in now.
I think you should get in. You look at the EEM, which is the traditional emerging markets index. Now, realize it's heavily skewed to the Asia Pacific investments, and those had been unreliable for several years, but they've seemed to gather together and done a lot better now that China's growth seems to be better than people anticipated. On the other hand, there's the Eurozone that is down at a 6-month low, really hasn't done much this year. That, of course, is being affected directly by Ukraine. So the fear is in the European stocks, mostly honestly blue chip kind of companies like Bayer, Sanofi, Roche, and the like, the fear is that Europe's going to enter into some kind of recession affected by all the Russian crisis. I don't think that's necessarily going to happen, and I think the valuations of the European stocks are really attractive right here.
Thank you, Matt.
In our cover story, slightly lower interest rates may be in your future. The Fair Isaac Corporation, or FICO, the company that compiles your credit information for bank loans and credit cards, is revising its criteria. It could boost some scores 25 points. Credit scores that determine your risk to a financial institution are about to become a little more forgiving. Overdue medical bills, often disputes between insurance companies and healthcare providers that go unresolved, can go to collection agencies, which can hurt your credit score. Well, effective this fall, those circumstances will no longer count against you.
I think it's designed to help probably that third of Americans that are a little behind on their bills, and some of those things include their medical delinquencies and things that they already took care of in the past. So now maybe they're going to have that second chance.
Also, FICO will change how it calculates old debt turned over to a collection agency. It used to stay on your credit report for 7 years, even after you paid it off. But also, as of this fall, if you pay it off, it can no longer hurt your credit.
It impacts 9 million Americans immediately. So I think it's a great first step. Of course, we'd love to see more, but it's a step in the right direction.
Will it promote home buying?
Clearly, it's intended to promote home buying.
For example, a borrower with a FICO score of 675 may likely pay 4 3/4% interest on a 30-year fixed mortgage. On a $400,000 loan, that's $2,086 a month. Now, bumping the score 25 points to 700 drops the interest rate to slightly above 4.2%. And the monthly payment drops to $1,959. The annual savings, more than $1,500.
Now, this is not going to, turn on a fire hose of loan applications by any means. This does not make the difference between denial and approval for borrowers as much as it may help people, by bumping up their credit score above a key threshold whereby they could get better terms than they otherwise would have gotten.
However, bank risk managers say they are still nearly 6 times more likely to reject a loan application because of a high debt-to-income ratio. If you want to improve your chances for approval, what hurts more than a low credit score is maxing out your credit relative to your income.
Losses continue to add up at the United States Post Office. The agency just reported a $1.9 billion loss in the second quarter. It follows a $1.9 billion hit in the first quarter. A large chunk of the recent loss was due to a $1.5 billion increase in operating expenses to cover worker compensation payments mandated by Congress to fund future retirees' health care. On the upside, revenue from the Postal Service's shipping and packaging business jumped 6.6%.
Colgate is attempting to brush up its image. A chemical called triclosan, often found in soap, has been linked to various forms of cancer. Attention is turning to Colgate after documents recently made public reveal that the company uses the chemical in its Total toothpaste. Colgate says Total is safe, citing rigorous FDA testing prior to the toothpaste's 1997 approval. Chemical safety is being reviewed by regulators.
Investors are smelling success. Mankind shares rose nearly 5% yesterday on word the drug maker is turning to French pharmaceuticals giant Sanofi to help develop and sell the inhaled insulin called Afrezza. That deal could be worth close to $1 billion. Afrezza could be released to the U.S. market early next year.
The CEO of pipeline operator Kinder Morgan makes more than $500 million in one day. CEO Richard Kinder is now creating a supersized network of oil and gas pipelines across North America by consolidating 4 companies into one giant enterprise with an estimated value of $140 billion. Kinder Morgan stock rose 9% yesterday, adding to Mr. Kinder's wealth. Kinder Morgan will become the 3rd largest energy company in the U.S. behind Exxon and Chevron.
Big investors are ready to cut a check for Chiquita. Investment firm Safra Group and agribusiness company Catrale Group made an unsolicited $600 million offer for the banana giant. It comes as Chiquita is in the process of merging with an Irish company. That combination could create the world's largest banana supplier. It could also mean a headquarters move for Chiquita from North Carolina to Dublin.
A high-end department store settles a high-profile racial profiling case. Barney's New York will pay $525,000 to resolve allegations that its New York flagship singled out minorities as suspected shoplifters. Shoppers and former employees said that store detectives would often follow minority customers as well as target them for credit card investigations. Barney's also agreed to hire an anti-profiling consultant for 2 years.
Aunt Jemima's great-grandson has filed a lawsuit to get royalties. The Wrap.com was first to report a $2 billion class action suit filed on behalf of Aunt Jemima's great-grandchildren. The suit claims the company denies Anna Short Harrington was an employee of Quaker Oats, while at the same time using her image and recipes for profit for more than 60 years. Quaker Oats tells us we do not believe there's any merit to this lawsuit.
Food is in focus in today's earnings roundup. High commodity costs made it a tough quarter for Dean Foods. The company says sales slipped 4% as consumers bought less milk due to soaring prices. The stock fell 3% yesterday. Earnings quadrupled at Smithfield Foods. The pork producer says profits surged due to strong international demand. And Darden Restaurants has a game plan. The company says it is launching a major brand overhaul at Olive Garden to boost sluggish sales.
Questions about the Bitcoin are being raised by a watchdog consumer group. The Consumer Financial Protection Bureau is taking complaints about the virtual currency. Richard Cordray, director of the agency, says although there are potential benefits, Cordray warns Bitcoins are not backed by the government, are targeted by hackers, and consumers are stepping into the Wild West by using them.
Amazon and Disney are at odds. According to the Wall Street Journal, Amazon has temporarily stopped accepting pre-orders for popular Disney titles such as Maleficent and Captain America. Disney's not the first to feel the wrath of the e-tailer. Amazon reportedly has had pricing conflicts with Warner Home Video and book publisher Hachette. Amazon did not return our request for comment.
Turning to the economic calendar for today, it's a jolt job openings and the Treasury budget. On the earnings calendar, Flowers Foods, JDS Uniphase, Cree, Kate Spade, King Digital, Fossil Group, and Myriad Genetics. Still to come, All-Star Stocks. What an expensive price tag of more than $500 per share signals to traders. Plus, can McDonald's catch up to healthier chains? And after the break, the new crop of startups landing in the airline sector. Stay with us. How low will it go? Microsoft is shaking up the mobile phone industry with a cell phone selling at the ultra low price of $25. It's the Nokia 130 and looks can be deceiving. It has a built-in video player for movies plus an FM radio. For now, the phone is available only in select markets including China and Kenya.
BuzzFeed makes news with a cash windfall. Media site has received a $50 million cash infusion from a venture capital firm. VC firm Andreessen Horowitz believes BuzzFeed is doing for news what Tesla is doing for the auto industry, plus notes that the site is consistently profitable. BuzzFeed is known for covering lighter news, but is staffing up on investigative and political reporters.
The airline industry is rerouting. A number of startup airlines are taking off to fill airport runs left open by major carriers. One of those startups is People Express. Jeffrey Erickson, CEO of the company, is Skyping with us this morning. Good morning.
Yes, good morning.
Now, you operate a discounter that just took flight this summer. What are some of your pockets of strength so far?
Well, the whole focus is to serve airports that had an existing historic traffic base that lost it because of industry consolidation. So we're just filling it back up again.
What are some of your biggest challenges?
Well, the biggest challenge with any new company is to get it properly financed. We've done that. We have now a strong group of customer service employees that are working very hard to serve our customers.
Has it been a challenge to find pilots? We have a pilot shortage going on.
Well, I've heard that too. I must say that we've had plenty of applications, and you should also know that at least on an interim basis, our schedule is being flown by Vision Air out of Las Vegas using their pilots.
Exactly. You rent planes too, correct?
Planes and crews, yes. Pilots and flight attendants, that's correct.
Now, there are several startups, and some people say there are too many, and historically most will fail. How do you respond to that?
Well, I think that history says most will fail. The key, in my view, is to making sure you're serving a public need, and we think we're doing that in markets with proven traffic. So we're here to stay.
Good to have you on the show this morning. The best of success to you. That's Jeffrey Erickson, CEO of People Express. Coming up, how some of the most expensive stocks climb to the top. Plus, if McDonald's strays from its classic menu to get healthier, will it satisfy investors and customers? We'll be right back.
A food safety scandal is sparking reform in China. Fast food restaurants in Shanghai are now required to post supplier information online. Shanghai authorities have ordered McDonald's, Burger King, and KFC owner Yum Brands to release ingredient and supplier details. In July, it was discovered that meat supplier Shanghai Hushi sold tainted meat to fast food chains.
Investors seem to be losing their appetites for fast food stocks. During the past 3 months, shares of McDonald's have fallen roughly $10 as Chipotle, which is a fast casual restaurant committed to sustainable raised food, has been nearly $200 higher in the past 3 months. David Hinkus, a restaurant consultant at Technomic, is here with the backstory. Welcome to the show. We love having you on.
Thank you very much.
Can McDonald's make a grand transition to becoming known as a healthier place to eat? And do they even want to?
Well, listen, McDonald's is under siege by a lot of different areas right now. Its core consumer is still really battered by the economy. Traffic is down. And at the same time, you see competitors like fast casual, like Chipotle that you mentioned, really doing a great job. And that's really where the consumer is on trend right now. And so for McDonald's, the challenge is really to try and transition to something a little bit more upscale and a little bit more quote unquote fast casual, upscale fast food. But it's very challenging given how big they are, and you know, a $36 billion chain. It's just hard to turn that around quickly, and I think they need 18 to 24 months to do so.
What are the fast food facts? Because at the end of the day, people go to McDonald's for the fries, the burgers, the yummy things.
Sure. Well, and I think when you look at some of the successful burger places right now, the upscale burger places, a Smash Burger, a Muya Burger, things like that, they really have gotten back to basics. Shakes, burgers, fries. McDonald's, I give them a lot of credit for innovative attempts, but they've struggled to hit a home run lately. And so what's happened is their speed of service has gone down because their menu's gotten too complex. And so, you know, in an attempt to fix what's wrong with them, I think in some ways they've almost exacerbated the problem. And so, you know, working to sort of create that upscale environment is certainly something that it's going to be hard for them to do.
Well, thanks for coming on the show and sharing with us.
Sure, thank you very much.
Still ahead, is it really worth it to spend nearly $700 on one share of Chipotle? Or how about Priceline at more than $1,000? Find out what traders think next. Talk this morning, James O'Malley of KeenOnTheMarket.com joins us for a look at those high-flying stocks. Good morning, James.
Good morning.
So I'm talking about Priceline, which is trading above $1,000, and Chipotle, which is almost $700. Is it worth it to buy these stocks, James?
Right, so for a small retail investor, there's one major thing that you have to consider when looking at stocks like this. It's that, generally speaking, your risk isn't necessarily more inflated when looking at a high-priced stock. Remember, one share of Priceline at $1,300 really does have the same amount of risk as 10 shares of another stock trading at $130. Now, generally speaking, these high-priced stocks aren't quite as accessible to retail traders because they cannot buy as many shares or have the ability to piece in and out of the trades as effectively. As an active trader, that is something that I always look to do, piece into positions and piece out of them. So if I were a trader that could not do that or did not have the capital to do that with such high-flying names, I would have to reconsider whether or not I wanted them to be part of my portfolio.
James, how do these stocks get so high?
Right, so these are both stocks that are just massive momentum names. Chipotle especially, we saw a huge gap higher in both CMG and Priceline on earnings, trading to these really lofty levels here. Now, there's a lot of different reasons why companies may not want to split their stock. There's debates over what that does for shareholder value. But generally speaking, I think that these are names that are going to have to split eventually if they want to draw attention from retail investors looking to diversify into these names, because they really cannot get into them or trade them quite as effectively at such high dollar amount for share prices here.
Thank you, James, for explaining that to us. Thanks for coming on the show.
Thank you.
That's it for now. Coming up tomorrow, what it could mean for the stock market as corporate America turns in better than expected profits. From all of us at First Business, have a great Tuesday.